Welcome to Insights into Insurance with Tom Sorensen of Americana Insurance Group. All information provided is educational in nature and not intended to be acted upon without first consulting the appropriately licensed professional.
Well, it's Saturday morning here on KATE, and I'm excited for a new program. It's Insights into Insurance with Tom Sorensen of Americana Insurance Group. And Tom, good morning to you.
Well, good morning, Paul. How are you doing?
Hey, you know what? Absolutely fantastic. I'm really excited. I have very little information on what it is that the whole scope of insurance could cover or questions people might have. So I'm excited to learn something, and I hope that everyone out there, too, is excited to learn a little bit about what insurance is and what it's all about. And Tom, if you could take maybe a minute or two just to let people know who you are and what Americana Insurance Group is all about.
Well, absolutely, Paul. Well, first of all, I want to say thank you for the opportunity to talk to you and your listeners about the riveting and exciting topic of insurance. No, I'm just kidding, but it's one of those things where people don't grow up and say, I want to be an insurance agent. It's something that we get into later on in life, and I'll be honest with you, I love the business. A little bit about myself is I got licensed back in 1994, so I've been in the business almost 22, 23 years now. I'm actually got 3 different designations, CIC, which is a Certified Insurance Counselor, AFIS, which is AFIS, Agribusiness and Farm Insurance Specialist, and a CPIA designation, which is a Certified Professional Insurance Agent. Those are designations that you get, and we do those to show our professionalism, and that's a key point that people need to know is what do those things mean after our names? Well, really, it means that us as insurance agents are trying to be professionals and educate ourselves. As far as Americana Insurance, our history goes back well into the 1950s. I came to Americana Insurance Group in 1999. We were actually commonly owned by Americana National Bank, so we shared the offices up there, and I became I came to work in 1999 with them and became the manager of the agency. I believe it was in 2000 or 2001, and became a co-owner in about 2007.
Okay, so you know your stuff.
Well, I think I maybe do.
Well, and I think that because what we're going to do is every week we're going to have kind of a different topic, and some topics are going to come from you.
Yes.
Some topics are going to come from the listeners.
Yes.
And I really like this one because I think it's very timely because people are wrapping up what they're doing in the fields, and it may or may not be a time where a farmer has to put out a claim on some of their equipment that they've been using because accidents tend to happen when you're out on the roads and things of that nature, right, Tom?
You are correct. This is a time where we probably have more numbers in claims on, well, our topic today is farm machinery and farm personal property, or some people call it chattel. So the amount of numbers of claims on that type of property is more during the active times, but to be honest with you, during the winter times is where you can have the big dollar losses of like fires of shops, and then they have their buildings full of tractors, combines, planters, discs, you name it. And so that's where a lot of those things, you really need to make sure that you're correctly insured.
And let's talk about that because I know we were talking a little bit off the air. There's kind of 2 different traditional paths that someone who owns a farm can take when they're looking to insure their machinery or their personal property. What are those 2 ways, and what are some differences there?
Yeah, the main 2 ways is what we call, and I'm going to be using some insurance terms, and that's I can't. I'm sorry that I have to do that, but I'll try to explain what it is. Okay, there there is part of your farm policy, or the farmers out there have farm policies, and they can insure their farm personal property under what we call coverage E, which I would say is the least popular. Normally, the coverage E coverage is where they can list out each item individually and only insure those items. Okay, so normally when I do that, or we do that, we see that as a lot of times it might be a retired farmer or a farmer that is getting out of the business, and they don't want to pay the big premium on everything. They just want to pick and choose some of their own property that they feel, hey, this thing is worth, $30,000. I want to make sure that I insure that. Okay, the next item might not be that important to them. If they lose it in a fire or some type of incident, they're maybe not as concerned. Okay, the other item, the other way of insuring is probably the most popular, especially for the more active farmers, is what we call coverage F, or unscheduled coverage F, which sounds really weird because I talk to my clients, and how does that work? It takes everything that you have, what is considered farm personal property, which could be a $500,000 combine, all the way down to that jar of nuts and bolts in the shop. Okay. And basically everything is insured on what we call a blanket. Okay. But the thing is they have to come up with a value of what is that blanket? How much is that? Okay. And that's the tough thing. So basically I give them, or we sit down together, me and my clients, and we go over and go through an inventory, and I have sheets that are made out to help them do this. And we've come up with what they actually have for inventory and the values. Okay, so that's, even though we call it unscheduled farm personal property, we actually do end up getting a schedule and put it together to come up with a value. But the thing about that is what can happen is, let's say a farmer goes out and buys a new planter, and it's a $40,000 planter, and he forgets to call me or the Tom or any agent of theirs. If it's insured this way, it's still insured. It doesn't have to be listed on any type of policy or anything like that. It can still be insured. Again, don't take my word for it. Make sure whoever is listening, or any listener that says, oh, I got insurance, well, you need to make sure that you contact your agent and make sure that is the way their policy reads.
And of course, this is kind of what we're doing, is we want people to understand that we want to make sure you're covered. So talk to your insurance agent, whoever that is, and ask some of these questions that you're bringing up today.
Absolutely. What I'm saying is things that are general into the industry. There these policies, and that's the thing, is that I want to make sure that people understand those policies are actually contracts. Okay, that's the hard thing about it, is it's a contract between you and the insurance company. Okay, and those can be very complicated items. Okay, so please go out and seek professional guidance, which would be your insurance agent, or potentially an attorney, or whoever it is, before you just don't take my word for it over the radio. You need to make sure that your policy could be different than anybody else's policy. Let's put it that way. So,
and every policy can be a little bit different and unique. So you have to follow through on it yourself, but I'm sure you'd be willing to entertain to maybe give someone an estimate too, right?
Absolutely. We're always available. And just something about our insurance agency, our niche is farm insurance. We're about, I would say, 60 to 70% agricultural. And then we also have commercial, we have home and auto, we have health, we have life, many opportunities for us to service our clients. So just don't think of us as a farm insurance agency, but that is our main niche. That's our, what do I want to say, bread and butter, but we do other lines of business too.
Excellent. Tom, if it's all right with you, we're going to step away for about 30 seconds, and when we come back, I'd love just to kind of continue on talking a little bit more about what we've been doing.
Oh, sounds great. I'm excited.
Yeah, me too. Make sure you stick around. Tom Sorensen and of Americana Insurance Agency and myself will be back. This is Insights into Insurance here on Kate.
In about 8.5 seconds, Uncle Ed will come to understand that the secret to deep frying a turkey is to make sure it's not still frozen when it hits the oil. Fortunately, Aunt Doris understands the value of insurance. She's got a second turkey in the oven, and Americana handles her homeowner's policy. So happy Thanksgiving from Americana Insurance in Albert Lea. Give us a call at 377-2000. Who knew a turkey could fly that far?
We're back here on Insights into Insurance with Americana Insurance Group's Tom Sorensen. And Tom, we took a quick break, and you were telling me during that break that if someone goes with Coverage F, what we were talking about in that first portion of the show today, they could incur some sort of penalty. What kind of penalty could they incur?
Yeah, this is, having Coverage F and having a blanket policy has its benefits. The biggest negative to it is the creation of the inventory and the value. Okay, I'm going to try to use some roundabout figures so that it's easier to follow. Let's just say a farmer has $1 million worth of farm personal property. Okay, and under Coverage F, almost most of the policies require an 80% insurance to value. Okay, so let's just say you have a large loss. The insurance company will come out and do an inventory of all your stuff. Okay.
Yep.
And when you come up with that inventory, hopefully you're insured to at least 80% of the actual cash value of that farm personal property. We always recommend having it insured to 100%, but the requirement under the policy normally is 80%. Well, so let's just say on $1 million farm inventory, that would be $800,000, right?
Yes.
Let's just say somebody had $500,000 of value. Okay. Well, in my Albert Lea math, I believe that's 62.5% of what they should have had at least of $800,000.
Yep.
Okay. So what would happen is okay, let's take an example of that person, that farmer having a $300,000 loss. Let's say he had a shop fire.
Okay.
Okay. Well, that $300,000, if they come out and do that inventory and they find out that he's only 62.5% insured of what he should have been, they will deduct from that $300,000. They will take down to 62.5% of that $300,000, which is $187,500.
Oh, wow.
Plus your deductible. So if you have a $300,000 loss and you're only going to get paid, let's just say $185,000 of it, you're not going to be too happy. Okay, this story I tell farmers all the time, and it's always like, no one's ever told me that before. Okay, so you're wondering, well, why did they do that? Well, because the insurance company needs to know how much they are actually insuring out there. If you're only putting $500,000 on the inventory, but they're saying that they're covering everything, well, and everything is actually $1 million, well, that's the reason why.
Okay.
So
look, that's something that can happen, and of course, you should seek out your insurance agent, whoever that is, and talk with them a little bit about that and see what you're insured for currently, right?
Absolutely. And there is a couple things that you can exclude from that Coverage F. So grain is one of them, because if you don't exclude it, that becomes part of your farm personal property. So that's a big number. Okay.
Yeah.
You could have hundreds of thousands of dollars worth of grain on site. And if something happens and your shop burns down and you got $500,000 worth of equipment, and you didn't put grain on your unscheduled farm personal property, but you didn't exclude it also, that's going to go towards that inventory and could put you in a co-insurance penalty. There's some other things too that could do that too, but grain is the big one.
Okay, excellent. We've got about 2 minutes or so left in the program. Let's talk a little bit about some myths that can happen.
Yeah. Well, the myth is there's some things out there that when I talk to farmers that I come across, and one of them is they always think that a building needs to be insured for the equipment inside to be insured, and that's not true. As long as the equipment is insured, it's insured. Okay, it doesn't matter if the building that they're in is insured or not. But that's the main thing. The other thing is what you always got to check with on your insurance agent, because we got a lot of guys that farm a long ways now, or might do some custom farming or something. Sometimes there's radius limits to how far that equipment can go. I was an expert witness in a case of somebody that the combine went over 100 miles and there was no coverage. And so, I've seen the 100-mile radius. So anything over that. So if you have a combine or a tractor or whatever that's over 100 miles away from your main location, there's a possibility that it could not be covered. Now, I'm not saying that that's the case in all policies. That's just some of them out there. So the other things that I always recommend is getting special form. That's the best coverage that you can get, and that covers things for like rock congestion on your combine. That can be a very expensive issue. I've seen them up to $10,000 or more of damage that those rocks can do. If you don't have special form coverage, that's not something that's covered. The other thing is also too, there's what we call farm extra expense. So let's say that combine does bring in a rock and that thing is going to be down for a couple of weeks. There's insurance companies, there's available coverage there for you to rent or lease another combine while that one's, because we all know at harvest time, you can't sit around for 2 weeks waiting for a combine to get fixed. So
very true. Tom Sorensen from Americana Insurance Group. This is Insights into Insurance. Tom, if listeners have a question they would like us to address or answer on the program, what's a great way to get a hold of you? The
best way to get a hold of me is I would like to actually have a listener question of the week. So if you could email me at tom.s@Americana Insurance, that's TOM, and then an S as in Sam, at AmericanaInsurance.com.
All right, that's the way you'll reach Tom, and we love to hear from our listeners. So if you have a question, simply let us know, and we would be happy to attempt to answer it as best we possibly can.
Absolutely. And the other thing is, if anybody's interested in insurance, they can always call us at 507-377-2000 also.
That number again, 377-2000. Tom, I look forward to talking with you next week.
This is a blast. Thanks, Paul.
Thank you.
You've been listening to Insights into Insurance from Americana Insurance Group. All information provided is intended to be educational in nature. Before acting upon any information obtained during the Insights into Insurance radio show broadcast, consult an appropriately licensed professional.